Good morning. Welcome to OptionsTender. What a day today. The gap down. I know there's a lot of talk, news. Why did this happen? It doesn't matter. So we were at historic highs. I'll show you that a little bit closer look in just a second. There's no coincidence. The charts tell all, and then comes the news. Now, in my opinion, the tech market is starting, now obviously that was a catalyst, but the tech market is starting to sell off because bonds. People are rushing to bonds. The rates are coming down, and we'll talk about that a little bit later and give you a visual of that. Okay. But right now we're going to go through SPX on the monthly time frame. Then we'll go through SPY on multiple time frames down to the 65, where we're going to show exactly what we did this morning and where we think stocks, or at least the market, is going directional wise. Okay. There's two clear scenarios for the bulls and the bears, and we'll be looking at both those. Okay, so make sure you stick around. Play this video at 1.25 speed or 1.5 if you need to get these videos done faster. All right, get that information out to you. We're doing this intraday about 11 a.m. Eastern Standard Time. So if you want to consider becoming a member for 99 cents, that includes the Discord and trade alerts. I saw in my comments yesterday somebody mentioned, watch out, guys. He's trying to get you for your money, and not in those words. And I commented back like, okay, yeah, I'm trying to dig deep in your pockets for that 99 cents a month. So I thought that was funny. Also, there was somebody that commented that stocks only go up. He's on here all the time, Mr. Pickles. I'll give you some recognition. And then I found out he mentioned that he started trading in 2009. Well, stocks have only gone up since then. Okay. Here we are at 1929, 2000 top, and we're forming top at 2025. Okay. We also have confluence with 2008, 21, and here we barely made a scratch. This move is going to be larger than you think. I think conservatively, and you can watch the big picture video that I just did last week, and I'll post that up top and above, or excuse me, at the end of the video. So at minimum, we're looking to make a retracement for this move here. Okay, so that's pretty devastating in itself, but I think it's not over then. Okay, so let's go over to SPY. Okay, here's a look at SPY. Same thing, rejecting off the top there. And just very similar to this move back in 2021. We had 3 months of price action. That third candle is what started to dip. I think that we possibly, now we're getting near the end of the month. So is this just going to be an indecision doji, or is this a reversal? We don't know. This week is just jam-packed with catalysts, big tech earnings, GDP, durable goods, all sorts of stuff. FOMC on Wednesday, huge. And then PCE on Friday. Insane amount of catalysts. So we're just going to stay the course and make sure we protect our portfolio. Should be a good week. Trader's paradise. Let's go to the weekly. Keep living most our lives living in trader's paradise. All right. We have the weekly time frame. Again, we're showing we back tested that same trend line, had a throw over here, back tested that trend line, and gap down from there. So you see we're truly trying to hold on to this 8 EMA. I don't think that's going to hold. Even if we get a bounce that's a little bit higher, we have the 20 moving average. This is the key. This is what we're going to be watching all week, all month, all the time. 20 moving average. We break down from there. Likely we're going to break down from this trend line as well, which will be a sell signal on the weekly time frame. But that 20 moving average is going to be super important after we get below there, if we do, then we're targeting 560. And we talk about that zone over and over, so I'm not going to harp on that. But it is a huge zone because it was a former resistance and huge target zone that price rejected off. Huge. Okay, so we're going to backtest that. Now, the time and price coming up window here is in February, the beginning of to the middle of February. And if things continue to break down, I think we're going to get a pretty vicious move. And wherever that low is going into that window is probably where we're going to see a nice reversal or bounce. Okay, now this if this plays out anything like 2000, the year 2000, then this move could be as devastating as a 14% move all the way down here to 127. This is the 515 first primary target on the weekly time frame that held. You see the resistance and support, and this can happen very, very quickly. On the daily time frame, on the daily, we have our traditional technical analysis look, held on to the large trend line here, and all that is happening at this point until or unless this breaks down from the flag here. We had a flag pattern breakout, tested that 2008 21 trend line there, and the 1929 with negative divergence on every time frame. And here, so basically we're just back testing the wedge. Okay, didn't even come all the way down to the wedge. So we'll see if that we'll add on some more call hedges if price gets down to on top of the wedge there, just to see what happens, because we have so many catalysts, and we'll let those play out with a bias to the downside. Okay, so here's some examples of different. Those are in the video that I'm going to post at the end. But here's some examples of different recessions that started and how quickly and how steep they can actually get going. Okay, so let's look at time and price. We're in that window where we were looking for a top. That happened. We don't need to have those here anymore. All right, this is 128. So, I'll leave this time frame in. That's for tomorrow. Let's see if we get a low tomorrow or something like that. But our next window here on the daily time frame is the beginning of February. So again, that kind of matches up with the weekly time frame. Let's see what happens when price is coming into that time window. Okay, so we're underneath the 8 EMA. We're fighting with the 50 and the 20. So we're getting pinched here. Maybe this is where we stop today. Could possibly get a hammer type candle, which I think we'd end up getting follow through after that. But hammer candle can be reversal. And if we do bounce, I think we'll sell into the bounce. But we have to be very cautious with the different things that are happening before the market opens. And tomorrow we have durable goods before the market, and we have consumer confidence at 10 a.m. So does that accelerate the market and it goes higher? I think it's highly doubtful, but we don't know that. So we're going to have to leave those call hedges on for a possible pop. But later dated puts are still in. Again, this is a trend line, or the projection, if it is anything like 2000, on how big that move can be and how steep it is. So our clear spots here, and the video is still coming down. I think we'll take a bounce hedge on this pretty soon. So we talked about that in the video. The individual analysis videos, we did all the tech today. Put that out earlier so we could get a vision of what's happening to the tech market. And we have the 200 moving average here. We have that breakout point. This is where I think price needs to go to back test where we're talking about on the weekly time frame. Also, this is a move here. I got to adjust that actually. up just a little bit more. Now this retracement now it even looks even better. So I do think 560 is our point here when we need to take some profit and look for some sort of bounce. I don't know how steep that bounce will be, but we'll see what happens in here, see if we can have some structure that we can look at, but so far we do not. Before I go to the 65, I want to show you 10-year treasury rates, and those are falling, had a nice gap down, and this is what I think is happening. We have on the way up, the rates are moving up. We have a relative strength in tech and weakness in small caps. Now that has reversed, and with gap downs that affects the market tremendously. So at this point we're selling tech and buying small caps, and that doesn't mean the market is going to go up because of the small caps. It just means the relative strength is going to be in small caps, which you see that we're up or we're only down 0.65%, and then the Qs are down 3%, meaning sell tech, buy small caps. And I'm not telling you to buy small caps, okay? Let's see. I think everything ends up going down because of rates coming down, recession is happening, and market, all the assets. We shorted IWM and DIA, the diamonds, today as well. So let's go over to SPY on the 65. And then we'll go around the horn. So here's a traditional look. And again, we had that flag breakout. And now I think we're gonna, this might have just been a wave 4 here, and maybe we get that wave 5 to close the gap and to possibly backtest this flag there, and we'll add some call protection going into catalyst. All right, but you know, this wedge, bearish rising wedge, broke down. We knew that was happening, that we have all that divergence, and then anyway, I won't harp on that. It's just no coincidence. And then now, if we change over to this board here, here's what we talked about in the Discord. So it's so important. If you just jump in there, you can ask questions. And I give a scenario. There's a purple scenario that's bearish, and there's the white scenario that's bullish. Okay, both come down to the same point of whether or not and what it should look like as well. So if you're a bull or bear, no matter what, we're looking for a pullback. Now, what happens after we gain some traction is we're both going to look for a bounce. Now, is that off of the 50% or is that off the 62%? I don't know. But at this point, if it hits down here today or tomorrow, it could be around the 50%, okay? And it doesn't have to obey this line in particular. There's only 2 touches there. This can be drawn as actually like this, to where now you have a zone where more of the resistances happened. Okay, now you have a zone, and so that can bring us down to the 62%. All right, and this was just a look. If it's the purple, then I mean clearly we can't see through the gap there, but if you look on the futures, we should look for a 1, 2, 3, 4, and 5 wave move, or in the white, an A, B, C. And all that says, and we'll probably not be able to decipher between those because of the zigzag. This would be an ABC, are pretty sharp usually. After a big move, you get a sharp zigzag, and then you go to new highs. Now we know where we stand on, and such a super important video that I made this weekend that gives us an update, but it also shows the McClellan oscillator and the summation. It gave us just huge clues that underneath the market is not healthy. The breadth is just terrible. And although we had a boost in the daily, the oscillator, we had negative divergence that formed. So we were looking for this reversal imminently. And so if you're a bull, you're looking for this to make new highs on wave 3. If you're a bear, you're looking just for a bounce and then heading lower. Was this the bounce? I don't really think so. We really didn't hit any targets. So I think this might have a little bit more to go even before it gets a valid bounce, okay? And it doesn't have to. This could bear flag here and just be shallow, and then all of a sudden the bears take over and fall out of bed kind of thing, But we're looking for a wave 3 eventually, and these aren't the exact targets, even though that's right on 555 where we're looking at 560 and a little bounce, 5-wave move down. So we're looking for an impulse down mainly. And so time and price is bringing us into this was on purpose. This cluster here, we have 11, 29, 31, and February 1st. So we have some time and price coming in really soon here. And I know that FOMC is on the 29th. And then we have earnings after the bell as well there. So just, again, a lot of catalysts. Just be safe trading. So let's look at ES. ES on this move. Actually, if we drew the channel, we're back testing that channel top. It's a fake break from a flag, and then reversing off of it. Now you can't even see what's going on here. So if I were to guess, I would say this is a 1, 2, 3, 4, and extension in 5, and that this initial move's over, and we're already retracing, and we're heading lower at this point. That's what it looks like on ES. Last night we had this gap down going into Sunday opening, and I said in the Discord, I said, I'm not sure I've seen a gap this big in the weekend. I don't remember there ever being one so large, and so this already looked bad before it even started to take off to the downside overnight. SPX. It's a traditional look here. Made a new high, divergent. Again, this is what that would look like if we're anywhere near 2000. But this is our zone here. It's our zone where we're looking for price to hit first and probably get a nice reaction off of it. All right, got underneath the resistance here and back tested the resistance. Could it go up to the next one? Sure. But rejecting so far off of there. And then maybe this is just an A, B, and then you get a little higher for a C, and then it corrects. The move is really almost done here for this initial move. So the meat's off that bone. So we're going to add onto our puts as price bounces. If it doesn't, that's okay, because we already have plenty out to February. February 21st would be the latest ones. QQQ. All right, so QQQ gives us a different picture here. All right, we had this flag breakout and broke down from it. Is it actually holding back? You could argue that if it gets and stays above this point here. Looks like a pretty crucial point to me at 515. We'll see what happens. Does this need to get a new high? I don't know. This is the same thing as SPY. Is it looking for a 1, 2 setup and we go higher? Or is this initially the 1, 2 and then a micro degree or lower degree 1, 2, and we're heading lower. Now this is a lower low here or lower high. So maybe we need to get one more low. This is a wave 4, and a wave 5 takes us a little bit lower to close the gap. And that would be a structure right there. Then we can get a bounce and head lower. The bounces are probably going to get less steep. Okay, they're probably going to be a little bit more shallow as momentum gets going on the downside. All right, in IWM, here's our look. That's the downtrend zone that we had there. Rejected, throw over, and rejecting again. So we'll see if price can actually get above there. Then our next target is 233. It'd be right there at options expected move. But we started shorting IWM already, and we can add it onto there because I think this is going to be short-lived, and we start heading lower. It had its initial move, but it has had a nice bounce here where I think we had some divergence in this move too. Yeah, we have negative divergence. SMH. Okay, this one's breaking down. We had our pattern here, ending diagonal. Let's move to the 65. Broke down from it. We're breaking down to lower levels, getting pretty devastating. I'm not confident in this trend line here. I'm not paying attention to that, but maybe we get to the gap or close the gap at this point. But super bearish. And again, this has a structure of a 1-2. This looks like wave 3, and we'll probably get a time-consuming wave 4 before heading lower. And maybe we close the gap with like some sort of ending diagonal or something like that. So I'm not going to look for NVIDIA to have a bounce yet because I don't think this move is complete. DIA. This one we shorted again. I mean, just a perfect back test of the channel. And we're getting a bounce here that's holding the market. So I could add on to really, but we have plenty right now. And we'll look for this to head lower at this point. So he had a gap down, close the gap, and this should continue to move lower. And finally, the VIX. Let's look on the daily time frame. Can give a 2 time frame view. Okay, so the VIX started to break out. It's back above the 200, the 8, all the moving averages here, and having a little bit of trouble at the 19. Super important area. Doji so far. And does this move lower? If we see this start to close the gap and move to a lower low, then well, clearly the market is heading higher and making new highs. I hear people talking about 6,300 and 6,500. Those would be probably the targets. We'll talk about those later if we start to see a breakout to the upside. But until now, we're having a big gap up, a pause here, and we should see higher levels at this point. So let's go down to 65. And so the big move down here, looks like we're gaining some ground. I think this is going to go higher, but let's see if it gets back above 19, and then should continue to move from there. And then our next resistance should be around 23. Okay, so we see this starting to make new highs. Obviously, the market's moving lower. I think this move is already happening. We could even draw another trend from here. And so that might be the actual reason why this is breaking down from that point. And so if you get above there, maybe this is a bull flag, get back above here, and then off to the races. So that's what we got for you. Anything else? All right, stay safe. Thanks for all the support and the likes. Consider subscribing, and we'll see you in the next video.